Hello, my name is Michelle, and you're listening to Profit is a Choice. With me on the podcast today is Courtney Durandi. Courtney is the CPA and managing partner of TDT CPAs and Advisors in Iowa. Courtney and her team provide boutique advisory services for small businesses that are in a growth mode. And today she shares with us the 5 blind spots of growing and scaling a company. If we ignore these blind spots, issues can certainly arise. And Courtney offers actionable ways we can recognize those blind spots and then do something about them in advance. Enjoy the podcast. Every day, empowered entrepreneurs are taking ownership of their company financial health and enjoying the rewards of reduced stress and more creativity. With my background as a financial software developer, owner of multiple businesses in the interior design industry, educator, and speaker, I coach women in the interior design industry to increase their profits, regain ownership of their bottom line, and to have fun again in their business. Welcome to Profit is a Choice. Hey, Courtney, welcome to the podcast.
Hey, Michelle, thank you for having me.
Oh, it's my pleasure. I'm excited to talk to you today. I love talking to people about the numbers and financials. And, of course, everybody listening to the podcast knows that, but I'm super excited to chat with you today. Before we jump in, why don't you tell us a little bit about yourself and about your company?
Sure. So I am a CPA and the managing partner of TDT CPAs and Advisors. So we are a boutique accounting and advisory firm in central Iowa. We serve clients all across the country. We really focus on helping small business owners who are generally overwhelmed leaders of their companies learn how to utilize financial information to grow and scale their business to support, decision making and really get their business onto the next level.
That's awesome. And you and I had talked about before we even came on that one of the pieces and parts that you enjoy doing, as well as your team, is really having that consultative nature to the relationship, not just being transactional. Tell us a little bit about how you do that and why that's important for your firm.
Yeah, so much of accounting is about capturing what has happened and reporting on it. And that's important as long as, banks and investors want financial statements and the IRS wants tax returns, we have to do that. But I think a lot of times accountants will stop there, and we feel that there's so much value that can be given to business owners when we take that next step of using that information proactively. So figuring out how we can utilize financial information to support decision making. So running what if scenarios and providing financial information and non-financial information to give you leading and lagging indicators, not just lagging, but also leading indicators to tell you not just where you've been, but where you are going. So we take a very proactive approach. One of the things that we found when we started to really focus more on being proactive is that a foundation of being proactive is having accurate, timely financial information. And sometimes that's a struggle for small business owners. Either they don't have the skills or the time to do it, or they don't have a bookkeeper to do it. And we have to start there. So we do outsourced accounting for clients. We do transaction processing, payroll, bill pay, reconciliations. We can do that if that isn't already handled adequately internally. Some clients have that piece under control, and we provide outsourced controller and or CFO services. We're providing oversight and review, and then more forward-looking guidance and advice. So, and then we also bundle that in with tax preparation and tax planning services. So we're looking at the whole picture, not just from a tax perspective, but also from a business growth perspective, and making sure that someone's covering that foundational level of accurate, timely financial information, because that's the basis for everything else we can do with that information.
100% yes. I'm doing like a big high five. Everybody can't see it. I think one of my big frustrations on behalf of my clients when I work with them is we're halfway into the next month and they don't even know what their numbers look like from the month before. And that's in a good scenario. Some of them are 1 and 2 months behind in getting that information. And they're looking to say, can I hire the next person? Can I make this next move? And our data is 2 months old at best. And I get so frustrated because I can't help them without that good, clean. Nobody can really help. I mean, we're guesstimating when we don't have good, clean data, and like you said, and have it quickly and have it when we need it. And I do get that that's a challenge, but there are things that can be done with your bookkeeper and accountant, especially that if they're watching for those things, to move things on a similar cycle. I know I went ahead and made sure that my credit card cycle kind of lined up with the other cycles so that I could get the data all within the same week and wrap things up. And so there are things to do there. But I love to hear that your firm thinks that that is important, because I think that is so very important. I mean, I know you've seen it. I know I'm not the only one. But it astounds me that sometimes we try to make decisions. And look, I've done it. I did it. I did it all wrong when I first started. Letting the bookkeeping and the accounting get away from you is so easy to do if it's not your love and it's not what you're great at. And so handing that off to somebody who knows and looks at it. Here's what I also really appreciate about the model that you just described, Courtney. And that's that it's holistic in nature. You're looking, again, not just at transactional, and you're not looking just at the tax doing, but the tax planning, right? Not just prepping for today, but planning for tomorrow. And the companies that I work with are companies that are growing and scaling in some direction. That's the same thing that your company does. And we very much align with that, is understanding that all of the things that they've been doing that got them where they are may not be all the exact same things, the exact same way they're going to get them where they're going. You know, a lot of my clients, when they first start, they can't even think about funding a 401k or an IRA or offering that to their employees. And then as the business grows, we're now talking about how do we create that, and how do we plan for that, and how do we budget for bonuses, and how do we budget for these things, and what might it look like if we do, like the scenario planning that you talked about. And so it always excites me to hear of other professionals offering that for their clients, because that's how we all get better together. Right. As opposed to just getting
Right,
smacked
exactly. And I
because we
think,
didn't think
so
about
many
it.
times business owners feel like they don't know what they don't know. That's probably one of the most frequent comments I hear
Yeah.
from prospective clients
Oh,
is,
yeah.
just, I don't know what I don't know. I need you to guide me and lead me and tell me and teach me. And so some CPAs out there just aren't structured under that business model to provide that kind of guidance and
Right.
expertise. And for us in our firm, we're not structured to only prepare tax returns. So there's different business models within CPA firms. I think
Right.
that's important to recognize for your listeners, is that finding the right fit, matching up that expectation for what you're looking for and what the firm you're looking at actually provides. They're just like in design, not everyone's created equally. There's different business models and different purposes, and kind of getting a feel for what you're looking for and finding a firm who will match up with that. We spend quite a lot of time in our process when we have prospective clients just making sure we are the right fit, so that there is value delivered, like you said, in those relationships.
You're right. The design world is the same way. We have some designers that go in and they are, buying products and putting it in the home. And we have others that are going in and building the home from beginning to end, or offering different levels of services. And coaching, we have the same thing. There are some that here's a course, you can take it. There are some that do one-to-one. It all varies. And so I love that you do an exploration to work through that. My guess is that this past year of 2020, you had to do a lot of scenario planning with your clients, because the scenarios kept shifting and changing on all of us. And my guess is moving into 2021, you're going to be doing even more of that. I know
Yes,
I'm
yeah,
doing more of
definitely.
that
That
even on
is
my
one of the
side.
things we've been very focused on with clients, because A lot of times business owners do a pretty good job with creating their vision and their strategic plan, but they don't often take that next step to crunch the numbers to see if their strategy is even going to get the results that they're looking for. And that's,
Yes,
yeah,
yes. It's like a disconnect. It's like the financial plan is over here on the left and the goals and the strategy are over here on the right, and near the twain shall meet. And you're like, no,
yes,
no, they have to go together. Yeah. But again, I
they
don't
don't
think it's
know
because
to,
they don't
right? I
want to.
think
I
this
think
is
they
one
don't
of,
know to
yes, both. I think
or
this
how
is
to.
one
Yeah.
of the blind spots that we see come up with businesses who are in that mode of trying to grow and scale their company. And we'll probably talk a little bit more about this as we go on. But I wrote an ebook that goes through these 5 common blind spots, and this one is so common. Just as you grow, as you get to this next stage of your business, um, this is something that can kind of come out of nowhere when you're starting out, or when things are very steady and predictable. You don't really need a lot of scenario planning, because you know what you're doing is working and you're continuing to do it. But when you're trying to grow and do something different than you did before, and you have a vision that's new and strategies to get you there, this is a new need. So it's not like you missed the boat the first 5 years and didn't do this. It's, you probably were doing it in the form of business plans and budgets. And then once you're profitable, sometimes you can start to feel like, well, I don't need that anymore. But actually having a plan for how you're going to spend every dollar you earn is still very relevant, even when you make a lot of money. And penciling out your strategy to make sure it actually gets you where you're going is a really important step of the growth stage. And I think sometimes this, like a blind spot, is something that's out there that you're missing, and you don't really know that it's right there out of your view. Something you might feel like something's off, but you can't identify it yet. This is a very common one that business owners don't realize right off the bat when they're in that growth stage.
It's interesting. Back in March of 2020, when we all got sent home, I immediately started thinking, okay, I think this is going to be longer than 2 weeks. I just, in my gut, I knew that I think this is going to be more than 2 weeks. And so I went out to my clients and said, okay, I want you to start creating. I just called it very quickly on the fly, plan A, plan B, and plan C. Plan A said, we're going to be able to get back to business in 4 weeks, 1 month. Plan B said 8 weeks, and plan C said 12 weeks. And I had pushback. I mean, nobody was mean. Nobody was rude. But they were kind of like, Michelle, gosh, that sounds so doomsday. Why would you tell us to go create a 12-week plan? Well, what week do you think we went to? We went to a 12-week plan. And I just said to them, I need you to start looking at your resources. I immediately put out a cash position analysis document. We need to know how much cash you have. We need to know this. We need to know what happens if you can't pay. We need to watch what's happening. And just started going through some of the immediate scenarios that were hitting us so quickly. And some people immediately, Courtney, were drawn to that. They wanted to know. And there was absolutely some resistance to it. And the resistance wasn't to doing the work, but to what it meant was happening if they had to do the work. Right. Yeah. And so I think sometimes our mindset stops us, because one of the things I teach as well is how to do a risk analysis. Like, because we always go to the worst case. All right. Right. A lot of times our brain goes to a worst case scenario on a project or whatever, but then taking that information and trying to put some data with it. What would it look like? What could we do? How can we work around that? I mean, do you find that when you are working with your clients that are growing and scaling, and as we're talking about the 5 blind spots, you're talking to them about different scenarios. Do you find some of the scenarios are positive, right? So they're not all negative. But do you find that when there are some that maybe aren't the best scenarios,
yeah,
do you
definitely.
ever get that resistance?
I think, a lot of, I think if you think about,
it wasn't just
some of this is personality based as well, and just how we're wired. A lot of entrepreneurs are visionaries. And so creating financial models to see whether an
Yes.
idea or strategy will or won't work isn't usually like in their desire zone. It's like I want to create the vision
Right.
and I think and I don't want to pencil it out, but that doesn't mean that you shouldn't have somebody who will pencil it out for you. And so I think for some business owners, especially if you're in a more creative profession, this might be something to just recognize it's not in your wheelhouse, and you've got to have somebody within your
Yeah. Yeah.
team internally or in your outsourced relationships that can do this kind of thing with you, and you can tell them your vision and your strategy. They can pencil it out, and then they can run you through some of the stress testing. What if this, what if that, because a lot of visionaries don't
Mhm.
want to think about what if this or that. But I think it's important to recognize that most plans don't turn out the way you had hoped. And so the purpose of creating the plan is to give you a framework to adapt and modify as things start to happen and you have more information now to revise your plan. So, I mean, this could even be
Right.
as simple as
Right.
thinking about an overall goal in your business to increase your revenue. Like maybe you added another designer and you've now got more capacity. And so if you're going to be able to pay this person, you have to find more customers. So the goal might be, well, I've got this capacity of this new team member, and so now my revenue goal just went up, whatever, let's say $200,000. Well, having a goal of $200,000 is really hard to actually achieve if you don't say, well, how many customers could she serve at what average amount per customer or client? Is it 8 customers? Is it
Right.
10? Is it 50? Like based on this team member's skills and our ability to gain clients in the marketplace, what is a realistic average revenue per client that we think we could get? Or if we're going to try to target it to be higher than what it was, what do we have to do to get that? But if you just say my revenue goal is 200,000, and you don't ever dig down any deeper into creating more detailed numbers that support that, it's really just a big dream. You have to do the math, and then you have to think through, okay, what is it going to take
Right.
me to get
Right.
there? Are there additional costs that are going to be required then for me to actually achieve that? What's the impact on other aspects of my business? And so doing this scenario planning, whether it's something, I'd say on one end of the spectrum that's pretty basic, and that's cash flow forecasting, to the other end of the spectrum where you're doing detailed revenue projections with different assumptions and lots of things in between. The whole point is to have someone who's helping you pencil out your strategy to make sure you actually have a shot at achieving the vision that you've laid out.
I love that it's a framework. It's funny. I'm one of those, I do that kind of planning, and I teach my clients how to do pieces and parts of it all the time. We, talk about hiring somebody and how many billable hours we can expect per week and at
Mm-hmm.
what rate and who they can serve. And do we want this type of project or that type of project? And what is the average that would come in? And how many do we need to talk to before
Mm-hmm.
3 say yes? Or, the whole thing. Um, and what was so interesting is there was a time in my business that I was in a partnership with some other people. We owned an investment company together. And my partner, my main partner, she is 100% the visionary that you talk about. Her dreams have dreams. I mean, she is just visioning all the time. And she's great at it. Like that is seriously a skill set for her. But she didn't step back and walk through it all to see what it would look like penciled out. Well, that's my skill
Mm-hmm.
set. And so we just happened to pair up. And it was so funny because, the first time she came to me with this dream, I said, I see. Here's what it looks like. And I said, so I would want to know this, and this. And she almost looked deflated. And I was like, don't be deflated. I'm just saying, if we want to take it and actually make it work, I need to know these things to make the assumptions, to finish straw manning it out for you to see it. Well, as we worked together, we ended up working together for about 4 years, probably about 6 months into it. She said to me, okay, so now I know what types of questions you ask me. So a lot of my visioning never comes to you because I know that I've learned here are the next 3 or 4 things Michelle's going to ask me. And if I can't answer those, I don't even come to you. I just keep thinking. So then I knew by the time she came to me, we might still have more work to do, but she had thought through some of those high level things as opposed to just going off on an idea. And not that she was ever erratic. She wasn't. She was very thoughtful in what she did. She just had that super gift of visioning. But together, it's almost like in like the implementer, there's somebody who can sit and think about how will we implement this. And Courtney, I also just want to point out, I love that. I love teaching frameworks. Right? I don't want to just teach somebody to how to solve a problem in the moment. It's kind of that whole teach a man to fish versus giving him a fish. And so I really love the idea of teaching and creating frameworks because we can pick it up and move it around to solve other problems. So when you said that about creating a framework, it's almost like your clients start to understand, here are the questions I need to ask. It may not be that they're the ones that are modeling it and you and your team are modeling it for them, but they now at least can start to train themselves on how to think about even a couple of milestones or KPIs or something that would say, keep going, or raise the flag to say, I need help, or back off, or whatever. So, I love that stress testing. It's so true. We have to, I've got a couple of clients we're working on building each bonus plans. If you want to talk about something you need to stress test, you better stress test a bonus plan, because once you roll it out, people are depending on that's the way it's going to work.
Yeah. So
what are some other blind spots?
One of them is you kind of hit on this a little bit earlier in our discussion. We were talking about the financial information and not having accurate or relevant financial information. So one blind spot that goes with that is, your gut feeling for what's happening in your business is no longer accurate. So when you start out and you're doing everything yourself, and you don't necessarily need timely financials, because in your head, like, you did all the work that contributed to it. You spent all the money, you earned all the money. You're not really relying on financials. But as you grow and scale, and there's way more activity going on in your business that you're not necessarily involved with, you can start to feel like you've lost touch with what's happening. In some cases, the financials aren't accurate. There are adjustments needed. Like, your gut is right that this is not accurate. Sometimes the financials are accurate. It's the calculations in your head that don't account for everything that actually occurred. So as your business grows and scales, you just can't keep all these details in your head anymore. So you have to have those accurate, relevant financial reports. So you have a clear picture of how your company really makes money and how you're doing. Otherwise, you can end up with lots of activity, maybe even high gross revenue, but little profitability. And I'm sure, I think that's a topic you're passionate about, I'm sure. So, but that's one of the blind spots. Your gut feeling for what's happening is no longer accurate. That is normal. Sometimes the gut reaction to this feeling is to say, I'm going to bring it all back in. Like, I'm going to take this back over. I can't trust these people. They don't know what they're doing. And that's, I don't know if you've ever read the E-Myth, but it's in the E-Myth by Michael Gerber. That's something he talks about E-Myth. That happens a lot in the entrepreneurial journey, is you delegate and then you feel like you've lost control, or they're not doing it like you thought, and then you just suck it all back in. And then all of a sudden what you've done is capped your ability to grow and scale with what capacity and skills you have. And so this is normal. It's something you should expect to feel. But when you start to get this feeling, don't pull it all back in. Recognize what's happening here. Recognize there was something in your blind spot that's totally normal. And instead of pulling all the financial information back in and capping your capacity to grow, recognize the importance of having someone, either internally or outsourced, that can keep those accurate financials for you and keep them timely. And you're going to have to shift to using that information to tell where you're at and where you're going. You can't just rely on it all being in your head anymore.
It's interesting. When I started my business back in 2000, I was doing custom window treatments and small projects for people. And I kept thinking at that point, I will always remember which fabric I put in everybody's house. Like I'll look at the fabric and I'll remember the project, I'll remember the job, and I'll know exactly where I did it and who I did it for. And then I can remember at the point where my business was so busy that I would see a fabric in my workroom and I'd be like, when did I use that? Who asked for that? Where did that come from? Right? Same kind of thing. We think we can hold all of this in our head. As a Profit First coach, what I see with regard to that blind spot, Courtney, is I see people that are making money. And at first they can parse out one account with all the money for all the company in it. They can parse it out. But then over time, they start looking at it and they want to hire and they're moving out and they need to buy new equipment. And they're looking at this one big bucket of money and they're like, yeah, I got money. Yeah, there's money there. And they're not realizing that they have already kind of pre-spent that money on something else. And we no longer have the ability to hold all of that in our head. And it is part of growing a larger company and a larger firm and being able to put some things in place, processes, procedures, outsourced assistance. But I also want to talk about this. I think there are two things. I don't think we trust our gut 100%. I don't think we should. I think we should look at data to back it up, but I do think we should listen to our gut. There's a difference there to me. And so if your gut's going, I'm feeling out of control, I think that the real decision making needs to be, am I really out of control? Or do I just think I am, right? Is it a timing issue? To your point, it may be that all the data is there, but it's not there when they need it. Well, all the data being there 2 months after I need it, it's not that it's inaccurate. It's just that it's not up to date. And sometimes it's that maybe the firm is giving you the information, but you don't know how to interpret the way they're giving it to you, right? Which then gives you that same gut feeling of I'm out of control when there's really not an out of control. It's I'm an out of understanding.
I think,
I
think, what,
I mean,
what
right?
we often talk to clients about is even if it is timely, that's one issue, like you said, that could be the problem. The other issue might be it's not relevant. It's not providing enough detail where you need it, and it's got too much detail where you don't. So for example, if you have different lines of business within your company, different main sources of revenue, consulting versus, markup on products, or if you have maybe some kind of a subscription where you're providing some kind of ongoing service, if you have any kind of, different revenue streams, maybe you need your financials to be broken down into those divisions or business units or profit centers. Seeing the whole picture all lumped together, even if it is timely, might not be relevant to you because you don't know, should I be doing more of this or more of that? Which one of these is more profitable to me? So having the information reported in a way that gives you relevant information, so profit and loss by profit center, being able to tell your margins on certain key products or customer bases or geographies, and then having your expense categories be relevant. Sometimes people will have a P&L that's 2 miles long and nothing stands out, and others will have way too summarized. So I think almost without a doubt, businesses need to take a look at their chart of accounts and evaluate, what do we need to change here? And it starts for us with, what do we need out of this? Like when we provide financial reports to you, what's most relevant and helpful, and what's going to be the key that helps you actually use this? Then we might have to back into changes in our process for accounting for transactions so that we get them entered at the appropriate level of detail so that transactions are tagged or have a certain dimensional reporting level so that we get what we need out of the financial statements. But if we don't take the time to figure out what do we need and what do we need to change in our process to make sure the data gets entered that way, you're just going to perpetuate having financial statements that even if you get them timely, still aren't relevant to you. Mm-hmm.
You don't know what to do with them. Yeah, I always ask people, okay, have you reviewed your financials? And they say, yeah. And I'm like, did you review them and you knew what you were looking at and you can use them in your decision making? Or did you go, yep, she sent them, check. Like, what are we doing with it? I've used this example before, but it's like having an advertising and having 20, 30,000, 50,000 and not even knowing where you spend it. Right. And the interesting thing that you bring up about chart of accounts, if when people are new and they're asking me, Michelle, how do I set up my chart of accounts? Like in theory, right? Because I'm not a bookkeeper, I'm not an accountant, I'm not setting up your chart of accounts for you. But I do have an idea about that. And what I always tell them is I don't want it to be any more complicated than it needs to be, but I don't need it to be so undercomplicated that we don't get what we need. So what are your main revenue sources? What are the cost of goods associated with them? And what do you want to be able to analyze? Like what decision making do you want to make? Similar to the questions you asked. And then how do we categorize our expenses in such a way that we can look at them quickly and decide what to do, right? How do we get it where we can drill down? And then you can move more into, do you want to do job costing? Do you want to do how much further? But I see people with these, like you said, P&L 4 miles long, where it's got every green sofa with brown legs, green sofa with, tan legs. And I'm like, people, please, we don't need every bit of that broken out as an individual cost of goods, put furniture. Like, how do we really need to look at that? We can draw another report, but so I love that because it clears up the blind spot of not giving us too much data, but giving us, the truth of the matter is we need the right data at the right time to make the right decision. And so what is that for each company?
It needs to be not
different.
Just accurate and timely. That's foundational, but it also needs to be relevant. And then, yes.
It's like a SMART goal.
Yep.
It's got to be the same way. Smart data. I love it. Okay, Courtney.
Okay, so the third blind spot is you're spending a lot of time putting out fires instead of preventing them. So as you're
we just need to get a cup of coffee.
As your business grows, you can end up spending a lot of time fighting fires instead of figuring out how to prevent them. And as you add more people and more activities, it becomes harder and harder to identify the underlying issue. And you can't tell anymore, are you fixing symptoms or are you fixing the underlying cause? And so what we help clients understand is that you have to start identifying your upstream issues. The financials report all the activity in your business, the results of it. It's what has already happened. If you want to impact future results, what shows up in your financials next month, you have to start identifying the key activities that are happening in your business right now that drive those results and start measuring and monitoring those. So this is going above and beyond your financial statements. This is another layer of reporting. You might call it a dashboard, a scorecard, or key performance indicator reporting. So it's figuring out the upstream issues, the underlying activities that drive your business, capturing, measuring, and monitoring those, and doing something about it while you still can, that'll give you a prediction or a leading indicator of what's going to show up in your financials later.
I've mentioned this before, but as a coach that focuses on financials, what I do is I use those financials to determine what decision making has been happening. And I share with my listeners and all the same kind of thing that you just said. The numbers on the report are really just showing us every decision we've made. It's just the outcome. It's a compilation of our decision making. If we like the numbers, keep making the same decisions. If those are not the numbers that we want or that we need or that are going to carry us forward, we have to go back and determine, to your point, which activities, what decision making did we do? Did we check to see? I mean, it's even as simple as little stuff like this. We found that we had a gym membership that kept being charged because we had not stopped and gone and done the activity of canceling the gym membership that we weren't going to. It can sometimes be little things like that, or to your point, bigger decision-making processes, the way that we're working with clients, the way that we're engaging in business, all of those things need to be looked at. So I wholeheartedly agree with you. It's like I'm almost taking your temperature. It's a temperature check for the company that says, are you healthy or are you not? Okay, now where do I go look? Because this goes back to hiring. It goes back to marketing. It goes back to who's your ideal client. I tell my people all the time, the way you make money is this: you sell the right product or service to the right person at the right price, and then you manage the heck out of it. And if you're not managing the heck out of it, then we got a problem. Well, what if you are managing it? Well, then we might have a pricing, an ideal client, or a product issue. And so again, you get to be able to go back and look. I love if I just had another person, Jack Tompkins, on the podcast where we were talking about dashboards and visual representations of data to help you make those kinds of decisions. It's so important to be able to look at our data in more than one way, right? And I'm certain that you and your firm, you help your team members and your clients to look at that data multiple ways and to think about it and talk about it. What's so cool, Courtney? I think about it as it's almost getting the data off the page and looking at it as something.
Well, and I think
tangible,
our brains,
if you will,
process visual data so much easier and more quickly than sheets of numbers. So some of us, who are wired to really enjoy spreadsheets and sheets of numbers, have to recognize that we're not necessarily the norm for that. And so we utilize data visualization to be able to show information, whether it's lagging financial indicators or leading key performance indicators, so that it can be, like you said, brought off the page and made so much more visible. And I think, if for your listeners, if you're trying to think about what are you guys talking about? Like, what could be an example of this? I like to give an example about cash flow, because fighting the fire of cash flow is very, very common. But cash flow problems are just a symptom. They're not the underlying problem. So you could have high sales, you could have strong margins, and still have a cash flow problem because it's taking too long to collect payment from your customers. So a lot of times people will measure their receivable days, like how many days does it take my company to collect payment? And they'll use that as part of their cash flow forecasting. Measuring and monitoring your receivable days is not going to change your results. It just tells you what's already happened. And if your receivable days is higher than what you want or need, you have to figure out what is happening upstream. Like, what's the underlying activities that impact my receivable days? Maybe it's taking your team too long to get the customer invoices sent out. Or maybe the invoices have mistakes. And maybe you have somebody new doing invoices, they have mistakes, and then customers don't pay because they're incorrect, or they've got mistakes in them. So they're fighting back and forth for weeks trying to get that resolved. And all of that drags out your receivable days. So those are just a couple of examples. Like, there are a number of underlying issues that could be contributing to the high number of days in AR. You have to first recognize that there's an issue and then go upstream to see what it is. What are the underlying activities? And then you have to start measuring and monitoring those. So if this was your problem, then instead of just measuring and monitoring days in AR, start measuring and monitoring the percentage of accurate invoices sent out and the number of days from when service is completed to when the invoice is sent out. Measure and monitor those and manage those. And if you can get those numbers changed, your AR days will go down. But just watching AR days in and of itself is not going to change anything. So figuring out those upstream problems, the underlying activities in the main areas of your business. So like you said, it could be anywhere. It could be financial, it could be operational, it might be something with your customers, it could be your people, like anywhere that you have kind of a raging fire right now. Think about what are the underlying activities? What are the leading indicators? And then how could you measure and monitor the underlying activities so that you can see problems before they start, or at least while there's still a chance to fix them before they show up as bad metrics in your actual financial results?
That's a good one. Some of my clients, when we first start working together, and I've seen a shift in the interior design industry now, but having been in it for 20 years, people didn't always take payment up front. And so they're putting out a lot of their cash and not taking it. We walked all the way back and started noticing those things and changed the process. The process is now 100% upfront. It's now a retainer that we draw off of. We started moving the cash to the front instead of to the back, so that we weren't paying out an employee for work that it was going to take us 60 days to collect upon. But again, you can't just check one thing. You got to walk it all the way back and ask yourself, is it still the right process? Is it broken? Where do I need to change standard operating procedures? What can I do? It's almost like with anything. You go back to the root, go back as far as you can, and then look there. Okay. This is so good. I'm loving it.
So the fourth blind spot
fourth
is you have
spot?
more cash than you're used to, and you don't want to waste it. So, normally like we just talked, normally cash is a problem. You don't have enough cash flow. But as your business grows and becomes more profitable, you should find yourself with excess cash at some point. And, you might ask, well, is more money really a problem? And it can be, because when things are going well,
it can be.
It's easy for costs to creep in. It's easy for inefficient processes to become status quo. And sometimes just the comfort of having excess cash can cause you to undermine your own success. So having a budget where you're planning how you're going to utilize every dollar you make is a way to get around this blind spot. So oftentimes I think the budgets are a tool to help us stretch our dollars when things are tight. And that's certainly an effective use of a budget. But really the purpose of a budget is to create a plan for spending your money, whether you have a little or a lot. It's being intentional so that you can make intentional, strategic choices about how to utilize those resources.
So I love budgets. I talk about budgets all the time, and I teach how to write a budget, create a budget, and my Understanding Your Financials course. I think one of the things that I have found most helpful in creating my own budget is to, and it kind of goes back to the strategy and some of the pieces that you talked about in that first blind spot, Courtney, but it's about even writing down the assumptions that I'm making when I create that budget. My husband and I have shared before, have taught the Dave Ramsey Financial Peace University, and I do Profit First. And so we're really about telling our money what to do instead of it telling us what it's going to go do, right? Or doing it and not telling us, and then we're wondering where it came from. But it's interesting when you make the comment about it's not always about not having enough money. It's about almost having too much money. Here are a couple of things that I see when businesses are scaling and they're more profitable and they didn't plan for it. They don't know what the new tax implications are going to be, right? Because when you make more money, you have more profit there. And I remember the year that I got more from my accountant. My accountant had said, Michelle, you need to make this amount of estimated tax payments. This was years ago. Okay. Well, thankfully, I asked her, what did you base that on? Like, where did you get that number? And so she said to me, this number is based on this amount of total revenue and this amount of net profit. I was an LLC at that point. Okay. Well, I realized, thankfully, I had asked the question because in June of that year, I had already surpassed those two numbers. And it hit me at that point. If I continue paying on the scale that we have established, and I'm on par now to bring in twice that amount, I'm going to be deficient in having made my tax payments. And so I called her, and certainly she was like, oh my gosh, yeah, here's what we need to do. But I had not been in constant communication with her to tell her that and for her to see it. So that's a big thing that I see when we are more profitable than we planned on. A second thing is we sometimes look at that and think about growing, and then we grow too quickly. Oh, I can go hire this next person. Like you said, the costs start creeping in, or we've got more money than time. So we just start paying for things that we don't necessarily need or wouldn't have paid for in the past. Or we don't even know that we can actually pay ourselves more. And so I'll see designers come to me with almost all their money sitting in the bank account because they are afraid to bring it into their home, and some of it, the taxes have already been paid on it, but it's sitting there because they don't know what to do with it and how to handle it appropriately for their situation, or how to hold it because they want to do some big thing. They want to move out of their building or move into another building and, plan build out cost and just planning for the future. That strategy of telling the dollars where to go instead of either letting them sit there or letting them wander off, and not knowing. So I think that is huge. It's almost, I had somebody the other day share that they were having a fear of success. Like, what happens if it all goes right? And that's a real thing. And it's very close to the fear of failure, because to your point earlier, again, we start to self-sabotage if we don't have a plan. I've seen people where the profits came in faster than they were expecting, and they pulled back on all of their marketing. And then what happened is it took a dive because they had not done the marketing to sustain it. And it's definitely a scenario we need to think about. And you're right, that's a huge blind spot. So how do you and your firm, how do you all step in? What have you seen? I'm certain that you've probably seen some of the same things I have. Are there any
I think
additionals that
one
you can think
one of the
of?
top ones that you mentioned that we also talk about is, are you paying yourself enough? And are you thinking through the impact of what this means? 'Cause I think what happens is, psychologically, we all react to change differently. And sometimes, no matter how exciting or positive a change can be, there's still this inevitable cycle of change where it's different. And so even if we've experienced all this success, it's a change. And even if it's positive and great, we can start to feel like, oh no, maybe I shouldn't have done this, and get into that kind of self-sabotage mode. So I think that's why it's so important to plan out, to budget out, because then you have more visibility about what to expect. And it's not like it just happens and then you find yourself trying to deal with the change that you didn't expect. Planning it out gives you a little bit more of a preview of what's going to happen, or what could happen if this all works out. And then you can get more comfortable with that along the way. So using budgeting and scenario planning, both of those two tools are ways to help people kind of try on for size, like what they're hoping to achieve. And so that way it's not such a shock or a surprise.
I think too, one of the other, I'll say maybe mindsets that I see is when people have, like, everything starts to work, right? I mean, that's really what's happening here. Is everything we've been planning and everything we've been doing, it's all starting to click at the same time, and we're reaping the rewards. And I also see fear creep into, oh my gosh, can I duplicate this? Can I replicate it? Is it going to continue? And so that fear of it not continuing or not replicating or not moving forward can also put us in that feeling of, I better hold back now, or I better pull back now. It's kind of like, here's the way it's coming to me in my brain. I'll just put it out there. If people think I'm crazy, it's okay. It's kind of like when you first learn to ride a bike, and then all of a sudden you're starting to go downhill, and you're starting to kind of really, get some wind and catch it, and you're going pretty fast. And at first you're nervous because you're thinking, oh my gosh, I've never gone this fast before. And then when you realize that you have control of where you're going and what you're doing, you actually start to enjoy the ride. Right. But if not, and we're not prepared, we don't have you and your team or someone like you supporting us, it's easy to slam on the brakes and say, I shouldn't go that fast down the hill. That's not safe. When maybe what we're doing is safe. It's just a faster pace or or more coming in. I see a lot of fear around the success, and especially when the money comes in, there's the,
Mm-hmm.
oh my gosh, what am
Yeah,
I going to do at that
definitely.
moment?
And I think the other thing that can happen, which is the last blind spot, is you kind of reach your limit. So, a lot of times
Mm,
as you grow and scale your business, you have to figure out how to do everything. And as things become successful and they start working, like you said, kind of things are all clicking and you're going faster and faster, you can reach the end of your capacity. And this can cause you to want to put the brakes on. And so, as the demands on your time and even your energy grow, you can find yourself either feeling like you're going to burn yourself out or you're going to have to tamper back on things. What we help clients understand is that you have to figure out where you and your team's skills provide the highest value to your business. It doesn't mean you should keep doing everything the same way you have been. And I think that's where some of the fear of failure can come in is, well, if I start delegating some of these things, what if they don't do it as well as I do? Or what if I lose some of the control? But carrying out roles and responsibilities within your business that don't match your skills and desires can be really risky, and it can stall your growth. Like you talked about, you can be like slamming on your brakes on your way down the hill on your bike. Um, that's kind of, worst case scenario is it stalls your growth. I think, at best, you just end up getting into a situation where this business that you've been so excited to build becomes boring and unfulfilling because you're not doing the things that you're most passionate about. You're doing everything to keep it all rolling.
I love that in the example that Michael Gerber uses at the beginning of E-Myth, where he's talking about the baker. She bakes these great pies. All of a sudden, she starts a business baking pies, and then she's got to manage the store, and then she's got to do all the other things. And at some point, she can't be the one baking the pies and running, the cash register and running the business, and it's just too much. And we all kind of start our businesses, even when they're really small,
Yeah.
as I'm going to say almost like a DIY experiment.
Yes.
How much can I do until it reaches capacity and you have to hand it off? You listen, I'm a coach and I have a coach. I have an accountant, I have an attorney, I have, 4 or 5 people that are on my team. I cannot do everything at the level that I want to do it by myself. And I think sometimes we, in fear, and I've been there, and Courtney, maybe you've been there too. Sometimes I think that we believe that delegation means handing it off without preparation. And nobody's asking anybody to delegate without preparation, right? When you delegate, it needs to be clear. It needs to be very clear on what you're handing off, what the expectations are, how it should be done. There should be a standard operating procedure to go with it, the metrics that are going to be measured. If we do all of that prep work, and we give a chance for the person that we're handing off the work to do it, and we know that they are equipped and able to do it, it actually gives us a relief to hand it off. And what I've also found is when I hire people that are smarter than me in those areas, they take me further faster than I could have ever gotten by myself. So, we're not like hiring stupid people to hand off our work to. I mean, let's be serious. I know that sounds terrible to say it that way, but sometimes we act like we're like hiring less than able to do what we're trying to hand them. And that's not the case. Eileen Hahn was on the podcast. And, one of the things she talks about in that podcast, Courtney, is hire at the highest level that you can for what you can afford. Like, look at what your business can afford monetarily and hire the best that you can for that money. And the more that we do that, the more calm we're going to feel at handing off the work, so that then we can do what we're passionate about. Like, I can go do coaching because I don't have to worry about how to create that Canva document. I don't want to go create a Canva document. I want to talk to somebody and help move them forward. And it's true no matter what our business type, whether we're a design or CPA firm or a coaching firm. It's how do we do what we do best,
Yep,
and how do we equip
absolutely.
those around us to
That's the way
support
you
us?
can contribute most to your business, is by doing what you are the best at and the most passionate about. And then the rest, have it handled by, an appropriate mix of contractors and employees carrying out clearly defined processes and procedures. And I think that's where, for some, we talked about, entrepreneurs are often very visionary and innovative, and so processes and procedures is not usually within their desire zone of what they want to spend their time on. Doesn't mean you have to do it, or it doesn't mean that you have to spend time mapping out the whole thing. You can hire someone to help you optimize processes, or you can hire someone to take on that role and work through the transition process and have them document the procedures that you've described to them and have them carry it out. So this is, in this blind spot, I think, what you can do about it is to recognize the value of having clear roles and responsibilities and processes and procedures, so that, like you said, you're not just delegating and walking away. No, yes.
It's not dumping.
You're setting someone
Dumping
up
and delegating
to
are two different
successfully
things.
handle what you probably just kind of in your scrappy, get it done type of way, figured out. And it's going to take a little bit of effort and energy to document that and lay it out so somebody else can take it over. But once they do, you're back to contributing to your business and really feeling fulfilled in what you're doing, because you're in the right role, carrying out the right responsibilities for you, and you've got somebody else adequately handling the other aspects of your business, whether it's accounting, payroll, technology, HR, operational items. It could be any of those areas. So you just have to really look for ways that you can increase efficiency or gain access to new expertise. Like you said, hire the best at this that you can afford. That's going to optimize your business and best utilize your strengths and your gifts and the strengths and gifts of the other people, your employees or your outsourced relationships, so they can, do what's most meaningful and helpful for you as well.
And that's what brings us joy when we work, is when we're doing what we were made to do, right? And what we love to do and working in our strengths. That makes all of us more joyful as we're doing what's in front of us. I also think too, Courtney, my gosh, if I had to go back and take on everything that everybody I've hired is doing for me, I couldn't do it. Right. And so at first you made the comment about, working to your capacity. Well, now that I've handed off, it's allowed me to do so much more. If I had to take all that work back on, I would have to shrink back down into what I could put out and what I could do and how I could serve.
No.
And I don't want to do that. So I think that's just a great reminder that for us to grow and to blossom, we have to let go and hand some things off and do it with forethought, very much with intention, and then monitor it and measure it and trust. I mean, we're building trust relationships here. We're not trying, again, to build a dumping relationship that we just dump it on the next person that walks by. We're trying to work with, hire, and outsource to people who love what they do and whose success is built upon our success. And when we build those very trusted relationships, we all succeed.
Absolutely. I 100% agree, Michelle.
Courtney, as we wrap up, before you tell us where you're hanging out and all that, could you just go over and read those 5 blind spots that companies could run into as they grow and scale, like 1, 2, 3, 4, 5? I just want everybody to have a good reminder of those as
you have
we
a
wrap up the
vision
show.
for your future, but you're not sure if it pencils out. Your gut feeling for what's happening in your business is no longer accurate. You're spending a lot of time putting out fires instead of preventing them. You have more cash than you're used to, and you don't want to waste it. And you've reached your limit, and you know there's got to be a better way.
That's excellent. That's exactly the clients I love working with, and exactly the clients you love working with. And I love that you have created this ebook. So Courtney, tell people where you're hanging out. Where can they find you?
Absolutely reach us on our website at tdtpc.com. And I'd love for your listeners to have access to this ebook for free. And so if they go to tdtpc.com/profit, then they will find a free download of this ebook that goes into more detail on each of these 5 blind spots that we talked about today. I think most business owners feel like something is off as they're growing, like they don't quite know what it is. And this ebook will help you diagnose and kind of just give some language around what your problem might be. How do you know you're struggling with it? And most importantly, what you can do. So the ebook is broken down into those 5 blind spots to help you diagnose, like, is this what I'm experiencing? Is this what's kind of been out there in my blind spot right now? I haven't even seen it yet. And then what can you do about it? Some very specific practical steps. I think it's a great way for your listeners to kind of take a next step forward and download that ebook. If you want more help after that, as you read through the ebook, we're absolutely available. We work with clients all across the country, one-on-one. There's contact links throughout the ebook, or you can certainly contact us through our website before that as well. So again, it is tdtpc.com/profit, and that's where you can get that free download, or you can text blind spot to 33777 and get the free ebook through that text as well.
Perfect. And I will make sure that I have all of that in the show notes, and people will be able to have access to get to that. Courtney, I thank you so much for your time today. This was a fun conversation. I love that you have your firm is also built on helping businesses grow and scale, which is the same thing that I do, from a coaching perspective. Certainly not, I'm not doing anybody's bookkeeping and accounting. I partner with bookkeepers and accountants for that. And it's interesting. My program is called AIM with Intent, and it stands for Align Your Team, Ignite Your Process, and Manage Your Money with Intention. And that's the process. That's my methodology for helping them scale. And so it 100% aligns with what you're doing on the financial side to give them the data and the information that they need to make good decisions. So thank you for sharing with us today, for alerting us to these blind spots so we can be watching out for them. And then even for the practical steps of how to do something about it, not just go, we're getting ready to get hit. And, it's a stop.
Yeah, it's my pleasure. Thank you so much for having me, Michelle.
You're welcome. I'm so thankful to Courtney for sharing these blind spots with us on the podcast today. Make sure to check out her offerings and the free ebook that she has made available to us. Planning, organizing, and reviewing our data is important, but equally important is getting the help and assistance we need to move our businesses forward. None of us can grow these businesses all by ourselves. My AIM with Intent methodology was created to provide a framework to grow and scale your interior design firm with ease. Let me help you as you move forward in your business and remove some of the overwhelm and stressors of managing it all on your own. If you want to set up a call with me, head over to scarletthreadconsulting.com and fill out the form for a discovery call. Let's plan and manage your profit, because we know success and profit don't happen by accident.